Hi, Clint Coons here with Anderson Business Advisors, and in this segment, I'm going to discuss how to set up your LLCs to hold rental real estate. That is the basic structure you should be considering when you create these entities. So let's get started. Now, if you recall, the way we approach asset protection for rental real estate is we want to start with an LLC that we call a holding LLC in a asset protection jurisdiction that is anonymity compliant. What does all that mean? We want to put you in Nevada or Wyoming because either one of those states offers superior asset protection from personal creditors. So if you got sued, they can't take your company from you. They also offer anonymity. So if you don't want people to know what you have, then you want to set up a structure in one of those states because when we create it, your name doesn't get listed there. So we start with the holding LLC that's going to be, I'm just going to use Wyoming because we set a lot up there. It'll start with a Wyoming LLC. You are the member and the manager of this entity, of the LLC, but it's not disclosed anywhere, so nobody knows that you're involved with this company. So you start with that company, you put your savings in there, you put your investments, cash, your brokerage accounts, all inside of this LLC for asset protection. That's imperative, because if you get sued, you don't want them taking this asset. Now, it's ready to start protecting your rental real estate. So if you already have a piece of property, let's assume that you have a piece of property in Colorado. Now, we know that that needs to go into a limited liability company. So do you just go out and create the LLC and you be the sole member of that LLC, dump the property in, and then put the LLC into the Wyoming LLC for asset protection? You could. Or what we would recommend we do is we create the Colorado LLC right here, and we have the Wyoming LLC listed as its sole member. So from a Secretary of State standpoint, when we create this entity here, we're making this member managed. All right, so when you file for this one, or when we file for you, it'll point to here. This in turn points to, this guy here, A.T. Mathis, which is not you, so no one will know that this is your structure. Now your real estate in turn that's over here on this side, what we're going to do then is we're going to put that into a land trust. So we deed it into a land trust, we'll just call that LT, and you're the individual who owns that land trust initially as the beneficiary. I will be listed as your nominee trustee. So this is all if you want asset protection with anonymity. So when it goes into the trust, let's say the property is located on 732 Broadway. Well, we'd say Clint Coons, it would be titled Clint Coons, trustee of the 732 Broadway Trust. Once the property goes into that trust, it's held in my name. I'm going to resign, and you're going to be appointed the new trustee. But that doesn't get listed anywhere, so nobody knows about this. They would assume that I'm entitled, or I'm on title of that property as trustee holding it for someone else. They just don't know who that is because the trust hasn't been recorded. After that is done, we will then take that trust beneficial interest that you hold and we will transfer it into this Colorado LLC for asset protection. So what it will look like is you have your Colorado LLC owning the land trust, which in turn owns the rental real estate. So that's how a structure for rental real estate would come together. Now, the next property you decide to acquire, maybe that's going to be in Pennsylvania. No, Pennsylvania's a bad one. Let's say you're going to buy it in Florida. So you'd create a Florida LLC right here, like that, owned by your Wyoming LLC again. And then again, we'd go through the same process. If you're going to buy it in your own name because of financing purposes, then we would do a land trust, put the property in the land trust, put the land trust in the LLC. If you're going to buy it in the name of the LLC, because the lender will allow you to close because you're using private money and they don't care, then you'll take title. You could take title directly in the LLC name, and you will have anonymity because no one will know that you're associated with that LLC because like the Colorado LLC, it was set up as a member-managed MBR/MGD LLC, so it all points down to Wyoming. A lot of times when we create LLCs, we create manager-managed. And if we're setting up as manager-managed, that means that you're going to be out there dealing with the public, and so that they need to see the fact that you're the manager. Or we're using anonymity like we are down here with the Wyoming LLC, and no one knows that you're the manager because the manager is able to resign, and we don't have to appoint you or list you with the Secretary of State. So when we're outside of those two options, then we want to use an anonymity shield, and member managed LLCs offer us that ability to do that. So if I come down here and I'm going to buy a property in Virginia, same thing. You create your Virginia LLC, owns the property. Maybe this one we're using a land trust, just like that. And that's how your structure will build out. So you could have an unlimited number of limited liability companies. You're only limited on the number of properties you intend to invest in. But note that all of them are held by this limited liability company right down here. Now, if you want to know about money flows, be sure to watch the segment on how you flow money through the LLCs, who the tenants pay. There's another segment on that as well, where I go into all that in detail. My name is Clint Coons with Anderson Business Advisors, and in this segment we covered how it works when you're holding rental property in LLCs.